Reader says to AK. I must admit that I am disappointed by this plan from AIMS APAC REIT. This is my biggest holding, and when everything was seeming to stabilize, this fundraising came. Look at the market reaction. For a modest equity raise, the share price has cratered by 9%. I regret my decision to add in the recent months, and I must admit I was deceived by their good performance. Despite all the odds stacked against REIT in this unfavorable interest rate climate. CapitaLand China Trust and IREIT are my holdings as well. The China sentiment will be a cloud over CapitaLand China Trust. Although I agree about what you explained regarding IREIT acquisitions, I feel that the shares will drift under 45 cents and lower after this. Overall, I must admit that the Singapore REIT have failed their investors. Even for income investors, disregarding capital erosion is not good. Total shareholder returns are much better with banks. To avoid overexposure, the only way out is to invest overseas. The home bias will prove detrimental to many. AK says to Reader. Oh, for sure, I agree that Singapore banks are better investments for income in the current environment of higher interest rates. This is even as their net interest margins plateau. At least they are lenders and not borrowers. Big reason why I increased my investments in DBS, OCBC, and UOB significantly in the last 1 year, instead of putting more money in REIT. If we invest in dividend payers which are borrowers, in this environment, we want to make sure they have strong balance sheets. When interest rates do decline again, as I think they would eventually, borrowers like REIT should do better. I know many people look at capital gains or loss, but unless we are going to realize those gains or loss, it is mostly academic to me. I am still more interested in whether I am going to get paid. So, I will decide to buy, hold, or sell based primarily on this consideration. For REIT, we really have to be prepared for possible rights issues if we invest in them. I have a blog on this. Is investing in REIT right for you? Pun on the word right was unintended. If we are fully invested and don't have the resources to take part in rights issues, then we could lose out. AIMS APAC REIT has a good track record when it comes to asset enhancement initiative and redevelopment of existing assets. They have said that they want to focus on organic growth to generate more income in their last report. They could either take on more debt to raise funds or issue equity to do this. With interest rates so much higher compared to a year ago, I would support the decision to do equity fundraising. As for IREIT Global, I really like the out-of-town assets which they are looking to buy in France. IREIT definitely has the debt headroom to fund the acquisition fully with debt. However, they are being prudent. In fact, after this acquisition is over, their gearing ratio will be at a conservative 33% or so. IREIT is really inviting shareholders to invest in more income-producing assets. If the REITs should be priced at 45 cents apiece, an estimated distribution yield of 8% or so is probably not too far off. Of course, I get the point that undervalued can stay undervalued for a long time. As long as I am being paid to wait, and paid well enough, I can wait. If AK can talk to himself, so can you. Relevant links in the description below.